Hello, welcome to RAD Academy. So, in today's tutorial, we are going to learn how to prepare an expense account. How to prepare an expense account. So, in a question like single entry and incomplete records, in most cases, there is a need for you to prepare an expenses account or accounting for non-profit organization question. There is a need for you to prepare an expenses account. Why? Because mostly in the when you are given a cash book in the single entry, the amount that you see in the expense in the cash book for a particular expense, or is not for that particular period. So, well, maybe in the question, let's say in the question we have this as the cash book, then we have rent 1,000, and we have insurance 700. So we have something like this. Then when you come to the additional information of the question, I'm using this to explain something to you. We have rent prepaid, that is rent paid in advance. And we have opening balances of January 2024, and we have the closing balance of 31st December 2024. And we have here to be 100. Here we have here to 150. And we have rent owings. That is rent in arrears. That is the arrears. We have here 200, and we have here to be, let's say, 180. So in a question where we have this, in a single entry question, where you have this, rent in the cash book is 1,000 cedis, and you find additional information where you have information like rent prepaid and rent owings. As soon as you see this information, then you should know that there is a need for you to open a rent account. Why? Because there is rent paid in advance over here, and there is a rent owings also over here, which means the 1,000 cedis you are seeing in the cash book is not the exact amount for the year 2024. So there is a need for you to open an expenses account, that is the rent account, to make an adjustment to know the exact amount for rent, which is for 2024. Yes, 2024. That is why there is a need for you to open an expenses account when you see this information. So sometimes you only see rent prepaid only. You still have to open the account. So it's either you see rent prepaid or rent always, or you see both. Or sometimes they give you the opening balance, but then there's no closing balance. They'll give you closing balance, but then there will not be any opening balance. You still have to open it. The expense account. So what I'm trying to say is anytime you see any information like rent prepaid owings, rent owings, any expenses owings, there's a need for you to open an expense account. So let's come to the insurance. So when you look at the insurance, you have insurance 700, but then the additional information, we don't have any information like insurance owings or insurance prepaid, which means the amount that you are seeing in the cash book all is for 2024. All is for what? 2024. So there's no need for you to open an insurance account. But then if this information is there, then there is a need for you to open an insurance account. So let's go to the format. I'm going to teach you how to prepare the expenses account in the format. So the expenses account, so they say this is our expenses account. Expenses account. I'm going through the format with you. So this is the format. So in the format where you have, let's say you have rent here, then we have rent prepaid, or let's say the expenses prepaid and the expenses always. The first thing that you ask yourself is rent prepaid or rent paid in advance. Is it an asset or a liability? And expenses paid in advance, is an asset to the organization, and all assets have a credit. All assets have a debit balance. Sorry, all assets have a credit. Sorry, all assets have a debit balance. So rent prepaid here or expenses prepaid. All expenses prepaid is an asset, and all assets have a debit balance. So if it has a debit balance, then it means the opening balance will come to the debit side. So balance brought down. Let me put it to brackets here. Opening prepaid. So if the opening balance is on the debit side, then definitely the closing balance will also come to the credit side. That is how it is. You should understand that. That is how it is. So as the closing prepaid. Closing prepaid. Then in the question, if there is rent owings, you come. Rent owings isn't an asset or a liability. The organization, the organization is still owing an expense. So it is a liability to the organization. And all liabilities have a credit balance. So if rent owings or expenses owings is a liability, then it means the opening balance of the expenses owings should be on the credit side. So we bring our closing balance, sorry, our opening balance. Let's opening owings, which should come to the credit side. And if the opening balance is on the credit side, then definitely the closing balance will be on the debit side. So closing owings. Then after that, you go to the cash book. Always it is an expenses that we are paying. So definitely the expense will be on the credit side of the cash book. So you go to the cash book, the amount that is paid for that particular expense. So you find that expense on the credit side. And as the double entry principle says, we credit and we what we debit. So in the cash book, the expense is credited. So it means when it comes to the expense account, the cash book will be what be debited in the expense account. So if the expense is credited in the cash book, then when it comes to the expense account, cash book will be what will be debited. So you write cash book and the amount that has been paid for in that expense, you write that same amount. So assuming the 1,000, you write that 1,000 here. So after this, then you do what you balance the account. So when you balance it, you mostly find your difference on the credit side. So that difference is what will go to the P&L account as the exact amount for that expense for that particular period. So that difference is what will go to the profits or loss account. So let's assume that expense is rent. When you get your operating expenses and you are writing rent, this is the amounts that is the one you've written profit or loss. That is the difference when you balance your account. That is what you are going to write. You are not going to write the one in the cash book. It is this amount that they are going to write as what your expense. That is all. So don't forget to write your balance brought down. That is the one that carry down on the debit side. Then you also come here to write your balance brought down. That is this. But then when you are balancing, we don't add these ones. So that is it. This is how to prepare. This is the format to prepare an expenses account. So I'm going to take a question on the expenses account and solve with you for you to understand it well. So if you've not subscribed to the channel, kindly do so because you're going to benefit a lot from this channel. Share for your friends to also have a benefit of this channel. Bye bye. See you in my next video.